Welcome to the Riskwiser Zone, the show where we dive into the world of stocks, finance, and investing to help you make informed decisions about your financial future. I'm your host, Lewis, and we're excited to have you join us today. We're starting off with a story that's been making waves in the financial community. President Trump recently made some comments about the stock market, and it's got everyone talking. According to reports, Trump believes that the stock market is going to continue to rise, and he's encouraging investors to get in on the action. Now, we know that Trump has a reputation for being a savvy businessman, and he's certainly made his fair share of successful investments over the years. But the question is, should you be following his advice when it comes to your own investment portfolio? We took a closer look at the numbers, and while it's true that the stock market has been on a tear lately, there are also some warning signs that investors should be aware of. For example, some analysts are predicting a potential correction in the near future, which could wipe out some of the gains that investors have made. Of course, no one has a crystal ball when it comes to the stock market, and it's impossible to predict with certainty what's going to happen next. But what we do know is that it's always important to approach investing with a level head and a clear understanding of the risks involved. We'll be exploring this topic in more depth throughout the show today, including an interview with a financial expert who will share some insights on how to navigate the current market conditions. In other news, Fundrise, a popular real estate investment platform, has announced a new venture capital product that allows investors to get in on the ground floor of some of the most exciting tech companies out there. And Lightstone Direct is offering accredited investors access to institutional quality multifamily and industrial real estate with a minimum investment of $100,000. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're taking a closer look at the latest developments in the world of finance and risk management. Our top story for this segment focuses on the current state of the markets, with a mix of news from both India and the US. In India, shares of Indigo's parent company, Interglobe Aviation, fell sharply after the airline reported a significant loss due to higher fuel costs and foreign exchange losses. On the other hand, the Indian government's decision to increase the investment limit for foreign portfolio investors in government securities has been met with optimism by market experts, who believe it could attract more foreign capital into the country. Meanwhile, in the US, the Dow Jones Industrial Average fell by over 285 points, or 0.58%, to close at 49,098.71, while the S&P 500 edged up by 2.26 points, or 0.03%, to 6,095.61. The Nasdaq Composite gained 65.23 points, or 0.28%, to 23 points, or 0.28%, to 23,510.04. These movements come as investors continue to navigate the complexities of geopolitical tensions and their impact on the global economy. One major factor influencing the U.S. market is the upcoming earnings season, particularly for the so-called Magnificent Seven stocks, including Apple, Tesla, and Microsoft. Investors are eagerly waiting to see if these companies can deliver strong revenue growth to justify their high valuations. The recent earnings report from Intel, which saw its shares sink 17% due to lower than expected quarterly revenue and profit forecasts, serves as a reminder that companies must demonstrate tangible results to support their stock prices. As we continue to monitor the ever-changing landscape of risk and finance, it's essential for investors and businesses alike to stay informed and adapt to these developments. Whether you're looking at the Indian market or the US, understanding the intricacies of global economics is key to making informed decisions. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at some news from the world of critical raw materials. Leading Edge Materials, a Canadian public company, has been making waves in the European Union with its portfolio of projects focused on developing high-growth technologies such as lithium-ion batteries and permanent magnets. The company's 100% owned Noraker heavy rare earth elements project in Sweden has been gaining attention, particularly given the EU's determination that these materials are critical to their economic importance and supply risk. With the global demand for rare earth elements on the rise, companies like Leading Edge Materials are poised to play a significant role in meeting this demand. In addition to its Norra project, Leading Edge Materials also has a 100% owned Woxna graphite mine in Sweden and a 51% owned Bihor Sud nickel cobalt exploration alliance in Romania. The company's diversified portfolio of projects puts it in a strong position to capitalize on the growing demand for critical raw materials. As we consider the potential risks and rewards associated with investing in companies like Leading Edge Materials, it's essential to remember that the market for critical raw materials is highly volatile and subject to fluctuations in global demand. However, for investors who are willing to take on this risk, the potential rewards could be significant. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.